This is Business Breakdowns, powered by Microcap Club, a series of deep dive conversations with microcap companies and the investors that know them best. Our goal is to explore the inner workings of microcap businesses while giving our community direct access to compelling companies and their leadership. I'm Ian Castle, founder of Microcap Club. Microcap Club is a private community of the world's best stock pickers. Since 2011, our members have profiled 1,500 companies, and over 300 have turned into multi-baggers. That's at least one big winner every month for 14 years. If you enjoy finding great companies early, well before Wall Street pays attention, Microcap Club is where you belong. I hope to see you in our community. And now a quick disclaimer. The purpose of this conversation is for informational and educational purposes only and should not be construed as a recommendation to purchase or sell any security. Microcap Club is not a registered investment advisor. Microcap Club, its partners, members, subscribers, guests, and affiliates may or may not hold positions in one or more of the securities mentioned on this program and may trade in such securities at any time. Do your own due diligence and seek counsel from a registered investment advisor before trading in any security.
Welcome back to Microcap Club's Business Breakdown. I'm David, and joining me today is my co-host Christian Schmidt. And on this episode, we are sitting down with Denison Hambling, Managing Director of Intelligent Monitoring Group, and Shenin Singh, who leads ADT's monitoring sales team and works closely on investor activity. IMG is building a scaled, tech-led security monitoring platform across Australia and New Zealand, covering monitoring, service, and maintenance, and a fast-growing push into AI-driven video monitoring that can verify threats and trigger real responses. We'll dig into what's changed in security, why video guarding is a steep change versus old sensor alarms, how IMG thinks about acquisitions, including the recent Tyco New Zealand Wormald deal, and what the cash flow story looks like as the business scales. Before we jump into it, maybe Denison and Shenin, could you give us a brief overview of your professional backgrounds? And maybe Denison can start and then we'll move to Shenin.
Sure. No, look, thank you, David and Christian, for the opportunity and appreciate your time, Shenin. My background is essentially as a professional investor. I left school early, went to university early, finished a master's degree at Auckland University as a Kiwi originally, and actually got very lucky professionally starting to manage Australasian listed equity at a fairly young age before the technology days. And then from there, essentially built a career up to 2019 looking after private families' money. My business that I sold out of in 2019 had over 200 family offices, some around the world. We were looking after $800 million Aussie. So I was the chief investment officer. In that time, we made did a lot of investing very directly. So we influenced a lot of companies, a lot of change management, boards, CEOs, strategy. Primarily, though, always consistently looking for a great business that we could hopefully own for a long time. So, I'd see myself as a long-term sort of business builder and by upbringing and also career. 2019, sold out of that business and found myself really looking after a couple of portfolios, including my own, invested in this business. And it's been a journey, which I'm sure we'll get to. I've ended up over 3 years now, I think coming up to 4 years this year, being the managing director and, trying to, undertake the journey that we're on. So it's been an interesting career. Shenin, how about you?
Thanks, Denison. So my background's a little bit different to Denison. So I'm originally from Fiji, and my journey in Australia started about 10 years ago. Part of that was I completed 2 masters here, focused more on market research and business analysis. And in the last 5.5 years, I've been with ADT in the ADT journey, working in the market intelligence business analyst kind of roles, and then up to recently with IMG coming on board and taking ownership of ADT. I've been working with Denison and the IMG team, work on ADT's business analysis all the way up to IMG, helping Denison with some of the investor related activity, and then just recently up to 6 months now, taking over ADT's monitoring sales team and driving opportunity in that space, especially with our video monitoring AI-driven solution.
Perfect. I think that's a great way to start. And that said, Denison and Shenin, the floor is yours for the presentation.
Fabulous. So look, what I'll do is I'll do a 10 or 15 minute just top down overview of the business, and I'll keep it fairly straightforward. For those that have followed us, I'm sure this will be potentially a bit superficial. But essentially, what is IMG and why are we called Intelligent Monitoring Group? This journey started with as a monitoring operation. When I joined the business, there were 5 what we call control rooms or bunkers. We now call them bat caves internally, that were monitoring effectively basic intrusion security alarms and a little bit of other stuff, but nothing sort of significant. And what we saw fairly early in our journey was an industry where technology had modern, fairly easily available technology hadn't been applied to unlock a whole range of solutions that you can look for in the world. So the starting premise was this was an unloved industry, was very fragmented, but in theory should be able to do a lot of things and should be able to monitor a lot of devices. We're in an IoT world, and at that time, if you recall back in sort of 2020, IoT was a really big word at the time, and so we sort of looked and said, well, this is a business that should monitor a lot of things. So we became Intelligent Monitoring Group. And so when you look at IMG today, and I'll bridge the gap between then and today shortly, what we do today is we monitor, being the heart of the business, we service and also maintain over 120,000 properties, essentially security systems across Australia and New Zealand. And we do that direct, that 120,000 is direct, being through the ADT business, which we acquired in 2023. We also, though, monitor another 90,000 properties on behalf of actually a lot of our competitors. So nearly half of our competitor base in Australasia actually uses our monitoring stations to look after their customers. So in total, when you put it together, what does IMG actually do? We monitor about 1.5% of all the physical premises in Australia, being commercial or residential, and it's far more commercial at the moment than it is residential, for reasons that we may get into through our talk and the history. What does that look like then? So IMG is the group that I'm the managing director of, and effectively there are only a couple of things to call out. One is we operate in Australia and New Zealand, and they are run separately. So one of the early decisions with ADT was to make them stand alone because the market dynamics are a little bit different. And being a Kiwi originally and an Australian citizen now, it'll be a little bit like saying it'd be ADT North America. Canada and the US are actually a little bit different, and you need to treat them a little bit that way. So one call out is we have that. The other thing though is in Australia, which is by far the bulk of the business, at least on the security side until we most recently made this acquisition, which we'll talk about. We also touch the market in 3 different ways. We have our direct business being ADT, where a customer, a house or a business comes directly to us. We have a business which is purely wholesale, those 800 business-to-business customers we have, which is IMS, which is actually the original business that we started with, the monitoring stations. And then we have this business in the middle called Signature Security, which is a very historic name in our market. It's actually its 30th year in business coming up in 2026, which we'll make a thing about. We've brought this brand back to life effectively, and it is working even more closely with our competitors. We're working alongside them. We're offering them scale benefits from IMG to help improve their profitability, to try to get them to grow faster in some of these solutions that we're using in ADT to lead the market. So we have a very unique, if you talk to anybody in the security industry globally, this market position we have is unmatched. It's been very hard to have this market touch and depth anywhere in the world. The other business, though, that we've got in here, which we acquired, we announced, we're yet to settle. That'll happen first half of this year, but we've signed and inked the deal on is what we're calling Tyco New Zealand there, which is another business in New Zealand, which is actually a fire services business. And so we already were monitoring their customers through our control room. It's a JCI relationship. So we bought ADT off JCI, and we've now bought Tyco New Zealand off JCI too. What that's going to allow us to do, though, is really cross-sell these more recent AI sort of services that we're offering in security across a much larger commercial base in New Zealand than what we currently have. So I'll get into that a little bit probably in the presentation. I'm sure it'll be a question, but it's really about how do we access a bigger market more quickly and then cross-sell these solutions, which we are leading the market in offering. So again, in terms of presence, we now have we have what I'd call a fairly complete footprint. There's certainly plenty of room still to grow our presence. The benefit of the footprint and the importance of the footprint is having the footprint allows the really big customers to want to work with us. They have struggled to find one-stop shop provider. If you're a Trans-Tasman bank, of which in this part of the world, there's really 4 major banks. They operate out of Australia and have subsidiaries in New Zealand. You can't have one provider. You could have 26 providers, and they could all be offering their systems, which are a different system, which is the best system, which is the whatever. And so you're not getting any benefit, of scale or use of technology or reliability necessarily as well. So that's been an important feature of what we've put in place. And I think today, we've really reached that point where we're seeing business coming to us increasingly, and we've seen this in our growth of our pipeline in our commercial business, which just continues to grow and grow. And we're looking forward to talking to people about when we get to our half-year result in February. Strategically, what have we really done here, or what is the strategy to the business? And the business strategy has been from the moment, and I'll say we, and when I talk about we, it was Peter Keenan, who represents Black Crane and is still the largest shareholder and the chairman of the business. We both joined the board and made the investment at the same time. From the moment we came in, again, what we saw was an underinvested business, but more importantly, an underinvested industry where, modern technology, and we could look overseas, and at that point, the monitoring platform was the key barrier or limitation on us, where we felt like if we actually put some really hard capital in, and it was hard because we weren't making a lot of money, we had to make an investment, in the business, which was overgeared and not cash flow positive to get the right settings in place. We could put a platform in place and invest in that, which ultimately, if we're able to access scale, which we've now done, we'll be able to start what I'll call that idea of a flywheel. So, we've got a strategy where we're looking to continue. We want to lead. And to lead, we want to invest in what we're offering. We want to be offering the most recent solutions. We've now got to the scale, which is attracting conversations and customers. And we want to make sure we have an ethos and a culture which continues that journey. We don't just rest on our laurels and get to a point where we're fairly dominant and a leader, and people sort of have to use us. We really want to move this market and grow penetration, make a significant organization here. The attractive thing about the business, and I think going back to the first point I made, where I came into this originally as an investor myself, was it's firstly it's very defensive. So the customer is buying almost like an insurance-like product. Like, how do I monitor? How do I have a need here, and it might be insurance, it might be security, it might be fear, it might be a whole lot of things. And as part of that, for us to provide that, what is a 24-hour monitoring operation and solution, again, mostly security, going to be a little bit fire as we move forward as well in New Zealand. It tends to a very consistent and stable, underlying cash flow in business. So you have to, you get paid to do the monitoring, so you're able to charge every month, but also these are systems and technology, and for them to work, you have to maintain them, you have to service them, There's often an upgrade cycle. There's quite a lot of upgrade cycle going on now with cameras and, putting new systems in. And so underlying just the fundamentals of what we do is a very attractive business. And ultimately, that's why, certainly if you look at America and globally, PE historically back in the 80s and 90s on the old platforms was very prevalent because you could gear these businesses up a lot because the underlying business generated really good cash. And so that's why, as part of our journey in refinancing from mezzanine debt to senior, we were always very confident because we knew that the underpinnings of this business, which we have well analysed and tested over these years, is very stable. So today, a really good portion of our business, over 60+% comes from monitoring and service and maintenance, which is very, very reliable. And what you actually want to see is that percentage going down for a while, because what that'll mean is our growth will be accelerating. We want to grow the front end, the new systems. We want to get more and more systems out. We actually make more dollars up front on a new system, but then we get the recurring relationship and fees and service over time. So, for us, at the moment, the growth is coming in new installation work and upgrades and things like that, which ultimately drives to a much bigger base of recurring business. In terms of the scale of the opportunity, again, what we are is a business that has a foundation as a monitoring operation. We're really focused primarily on security, where AI has had a profound effect, a positive effect, a disruptive effect. And how that comes to pass is that now what used to be a black and white camera you might have had in your house a few years ago or in a business, so that you could actually look at an event after it happened, or live if you happen to be watching a screen. Now that camera becomes a live device, almost human-like. It can hear what's going on, it can see what's going on, and we can also respond to it verbally. And so the camera has now essentially started to replace a person as a guard. Now, it obviously can't tackle, it can't apprehend, but what it can do is it can look and analyze behavior before, probably more efficiently and better than a human can, and therefore we can trigger the authorities. And so the really big story in IMG, the bit that we like to focus people on, is this profound use of AI technology in the security market, which is now going to replace old style alarm systems, which had no information. They were just alerting you that something had happened, to now allow us to be proactive. And if you think of it that way, the opportunity is significant. So if we look at our market in Australasia today, only 7% of premises have monitored intrusion alarms. These are the old alarms with a signal that if it goes off, we have to either send somebody to see what's going on, or we have to ask the customer to resolve it themselves. So it's low penetration. When we look at the overall security market to which we're looking to disrupt, though, and we make some limiting assumptions, we're not going to get the whole market. People are still going to want guards. The price is going to be lower. We see an opportunity of about a 5 times increase in the total addressable market available to us as we roll out these systems. And so, putting the platform in place was the first step. Now we needed a go-to market, which was really ADT and growing that network. Now we've got to match that and take these solutions to market and drive growth over the next couple of years. And we think that can be significant. Sorry, I just struggle with that. So in terms of when you step back and say, okay, so you're a service business, you appear to have an advantage at the moment. You've invested a bit in front of everyone. What I like, or may not be palatable to hear, but what I like to say to people is, we don't really have a particular comparative advantage long term. We've got a lot of advantages today, but what are the things that are really the long term advantages that we're going to be able to fall back on? And ultimately, I come back to this reach that we have, both physically, but also in the market position we have with working with the industry as well, is going to be very hard to replicate. It's very hard for somebody to build up what we built up. Not impossible, but hard. Secondly, as we're now in an AI world with images, being the key thing that we're looking at, to determine whatever behavior we're trying to track, trust becomes more and more important. So being big first and early allows us to build a reputation, allows us to invest in ISO standards and gradings and ratings, in a way that can engender true processes and trust with the customer. Ultimately, it's a bit like a bank. There's not much different, but the one that you trust is probably going to be the one on the margin that you're going to want to go to. So we're big and we're trustworthy. And then the final bit is we are very, at the moment, we're very unique in that we've built our operating control rooms in a way where we're the only player that has built true redundancy in our platform. So, and there's very few players that exist in our market today that can also do that. So what I mean by that is, if we monitor your system in Australia, we've got an A1, R1 rating, basically we can't be taken offline. We have two rooms that back each other up. They run concurrently in different states, and one fails, and it is instantaneously we're still online tracking. For whatever reason, power. Even with power, we've got multiple backups. We've got systems upon systems, so that if we've told you we will monitor you, we will monitor you. And we're the only ones in Australasia that have an A1, R1A footprint. It's so A1's the class, which is the most secure. R1 is the most redundant. And A is the extra bit that no one else can have. Then there's probably only other two competitors that could actually do that if they wanted to, and made significant investments to do it. So we think there are advantages. We think they're good ones. Ultimately, though, the real advantage is a culture. And I was in, not to divert too much, but I was actually in New York a week or two ago, and I happened to be sitting across from the new JP Morgan building, and it struck my mind, like how does one business and what is an otherwise very competitive, global market, reach a level of preeminence, which and still have a reputation of quite fine service? Well, it's your culture, it's your people, it's your customer focus, it's the things that ultimately matter day to day, and that's the bit that I'm very intentional about trying to bring to this business long term, so that it well outlasts me. And so the way we are looking to unlock growth, and the way we are looking to, in some senses, bring ADT back to life in our region, but also drive with these solutions into a wider market, is firstly to really focus on enterprise and commercial customers. So we have a limited amount of technicians, but we have a lot of value that we can add to a business today, and particularly a big business. So in the first instance, what we've been trying to do is grow our commercial footprint and our commercial business. And what we want, and what you will see if you ever go through Sydney Airport or Auckland Airport in New Zealand, you will see the ADT brand up. ADT looks after the electronic security at Auckland Airport and Sydney Airport. Now, what we are trying to do is have that resonate. So when you walk through and you think about maybe your home, your family, your business, your beach house, your, whatever it is your problem is, or whatever it is you might want to monitor, you go, well, if ADT can look after, the largest airport in Australasia and the most important airport in Australasia, and or the government, and or lots of businesses we look after, something like we look after about 24 of the top 50 biggest businesses in Australia by my count, when I've run the numbers recently or were involved with them. You say to yourself, well, gee, they're probably able to look after my house. Maybe I should give them a call. And so the strategy has been to really own and come back to life in that commercial space, which is also why we made that acquisition in New Zealand with what we're calling Tyco New Zealand, but is actually the trading name of that business is called Wormold in New Zealand. And Wormold Brothers has been around for over 100 years in New Zealand. Actually, his first job was done in 1889. So it survived world wars and depressions and viruses in the fire space. What we're looking to do is to take its commercial customer base and now leverage in, our security systems as well. So that's been the focus. Now we are starting to broaden out. We're not yet advertising significantly, and actually, it's having Shenin here is a good point. Not to set her up. Shenin's involved with now taking over the inbound sales function for the general ADT line and starting to sell these value-added services. So ADT Guard being the particular one, and lifting our sales rate of these modern, the really effective security solutions, and then ultimately seeing that turn into an engine over the next year or two, which will, we're expecting and hoping will really lift our business. So I'll step back again and just conclude so you get a sense of the journey for those that don't know it. So, and I use this slide a little bit. It's really a marker. So I took over the business as MD. When I did it, it was about a $7 million market cap. I think we had about $52 million of debt. We're probably lucky if we were cash flow break even. and we're a wholesale business, with 2 rooms and making an investment into a platform. And fast forward today, very over-levered, with a clear view of what we wanted to do, through a series of, both transactions, but also, consistency and putting the business together. We've come a long way. And so today, we've had a, good return for those that have been on the journey, and, it's clearly part of what we're trying to do here, but we've also brought the business back into being, investment grade. So the relative debt ratios have come down. We now do generate good cash, and it has started to become apparent, but will increasingly become apparent to people that, stick with us on this journey. But we're also seeing growth, underlying growth come through, and really our focus is trying to accelerate that and optimize that over the next couple of years. We're building a business. We're not sort of an M&A sort of enterprise with a bit of business on the side. So this is a really great, time for us after a lot of years of hard work to get to this point where we're starting to see the seeds of what we've been working towards start to come through. So, I'll probably pause there, Dave. I don't know if I did a good job on my timing or not, but hopefully that's given a flavour for people about what we do, who we are.
Are you a new or experienced microcap investor? Do you want to meet microcap management teams as well as other microcap investors from around the world? Planet Microcap hosts the highest quality in-person microcap events in North America. The mission is to bring the best microcap investors, companies, and allocators together to gather, connect, and grow. Visit planetmicrocap.com to learn more about our Las Vegas and Toronto events.
Yeah, that was perfect, Denison. And maybe I'll start the Q&A with one question, and Christian then can jump in after that. The first question I have for you is, where are you allocating the company's attention today? What's the single highest internal priority? And I guess this is a loaded question, but
Yeah, no. Look, it's all about delivery. So we have assembled, by and large, everything we need. I think, to be successful. Now it is about actually consistency and delivery, and that time between, putting the hard work in, the calls to customers, explaining what we do, the looking for opportunities, and the seeing that start to come through. Now, again, we're absolutely seen that in the commercial side, and have done, virtually right off the bat from buying ADT. But I think we're looking to see that broaden out. So the singular focus is delivery. It's that organic growth line, and watching that to start to see it come up. I think it's not it's a journey. We feel very positive about it, but it is something you have to put in place. So a word that I learned when I took over ADT that's used in business speak is cadence. And I always laugh with the team about it because it's something JCI used to talk about, but the cadence of business. So the day in, day out, conversations and pushing of the business forward is the focus. For me, that's people. So the focus is really the people, the leadership, the creating the right environment, getting the culture, the HR, all those things to a level that represents the sort of company that we want to be, and we want to be the Goldman Sachs or the JP Morgan of our industry. So we need to grow our way of doing business, our way of working together, and it's a journey. Like every year I say to everyone in the team, like there's a step up to be made every year. Every year the bar goes up, and we have to push and make it. And not always does everybody make it either, which is a tough, can be a tough thing to have to deal with. But ultimately, we're all aligned around trying to create this great business that we can be proud of, that hopefully, we can all look back on our careers of being part of building. So it's execution, David.
Yeah, my first question is for you, Denison, and I'm sure you're going to like it because I asked you that once before. Is IMB a roll-up? So how should you perceive you as a company or your strategy?
Yeah, we haven't had to, but it has been. The easy answer is no. So my answer is no. We're not a roll-up. We're building a business. Using M&A when you can do it, really effectively, and when you're really clear about why you're doing it. So we were doing it, initially. So if I step back, the first instance after realizing we needed a platform, we actually stopped and said, right, we'll just work with the industry and we'll try and get growth. We've invested in the platform. They should all want to use us and take these solutions out. And what we found is that they really didn't. Like, they were busy day to day doing their thing. Great, love it, love that you can do that. And so the next step was, well, we're going to have to do it ourselves. So everyone get out the way, we'll buy ADT. So we bought ADT so that we could actually do it ourselves. And then we bought ADT and said, well, to really optimize ADT, we really want that network. Now we can build that network, and we are, by the way. Like, we're doing a lot of internal investment. Our staffing levels are going up, because we are not just buying businesses, we're also making internal investments, new people across the business. But, obviously you only see the transactions and the things that get announced. And when we looked around and said, well, we don't really have a presence in WA at all. When we bought ADT, ADT had a very, very small presence in West Australia, which is a really big market, particularly for mining. We said, well, gosh, we've got a business we could buy here that could fit into ADT, that we can get it, under 3.5 times EBITDA. The staff want to work with us. It's just an owner who's effectively retired. We can rebadge them. They sell. Oh, well, we should buy that. And so we are a roll-up, but we would appear to be a roll-up, but we're opportunistic, and we are about, I always wanted to get to a point which is sort of essentially where we are now, where if I got hit by a bus, if Peter Keenan got hit by a bus, if we were both hit by the same bus, if the operational management team, the general managers, were left to run the business and there was no more M&A to be done or no more access to capital, that we would be in a strong position to push on and grow the business. That's what success was going to look like, and that's where we are today. So we've used M&A. We could be called a roll-up if that's the way it was interpreted, but from our point of view, we were always about building a business. We used it to build a business. Now, do we continue to do it? Now we're in a position where it's very opportunistic. So that last transaction, frankly, I've been aware of it for 2 years. And I never thought we could get that business at the price we could get it at, and that we'd be in a position to hopefully be able to add value to it. So, when we weighed that up, we pushed really hard for it, and quickly, because it was just too good to be turned down. And look, it's one I accept. I think people will need a little bit of time. It'll take time for people to realize how good that probably was. But that's okay. We're not in a rush. We're actually, we're patient actually, and we wait. So, I think it's in the eye of the beholder, Christian, in terms. But now we are very opportunistic. Now it's about, where can we use our capital? Where's the best use of our capital? We can obviously still buy very accretively, or have been able to. So, that is an option. We have plenty of options. It's a very, very fragmented industry, very fragmented. But likewise, again, what you don't see is how many times we've said no. And, I say no every day, actually, because, there's more to buy than we would ever want to buy. Where it makes sense for us, where we're in the right shape and the time, we'll always, and it's particularly the right value. I'm a shareholder too, and I've got high return hurdle myself. Like we'll consider things. But I think we're moving out of that phase, by and large, in terms of probably being called a roll-up. I think we've become a real business now.
Okay. You already talked about the most recent acquisition, which also, excited me the day when I read about it. So why don't you talk a bit more about your most recent acquisition? And I also think that it was a bit different than all acquisitions you did before. So what can you tell us about that?
Yeah. So look, again, very much an opportunistic situation. So what we've bought is we'll call it Tyco New Zealand. Now, we are not. When you buy off JCI, you can have a number of restrictions about how you present, what you say. Everything has to be signed off by our divesting partner. And so, I still have to be a little bit careful today about some of the way I might explain this. But Tyco New Zealand effectively we bought 2 businesses as part of it. One was a security business called Red Wolf, which is a high security business. I didn't actually know about it when we bought ADT. I wasn't really aware that JCI still owned it, and it had never been merged into ADT back in the Tyco and the JCI era. It operates in Wellington. It looks after the Ministry of Foreign Affairs in New Zealand, and it's re-won that contract for 10 years, and it's actually expanded its footprint very recently. It does really high level security work like we do in Australia, where we've really grown that business. And so that filled a natural sort of role, what we were looking for in New Zealand for ADT. So that becomes ADT Redwall. The other business, though, which is the one that really stands out in the bulk of the value, was a business, again, that we will call, once it's in our hands, Wormold. It's been called Wormold for over 100 years, but it got its name changed a couple of years ago to Tyco New Zealand, and its emphasis has come off. Now, it was the leading fire services business in New Zealand. Also, it operates in Australia. So New Zealand and Australia, the Australian piece is owned by a private equity firm, so it's not a discussion or part of the picture here. But the New Zealand business had stayed inside Johnson Controls and really had been, it's been a great business, but I guess if I can say it in a fairly quiet conversation, has probably been fairly unloved or largely, forgotten about. And so we've seen within it, they've had new management apply and some investment made to it in the last year, and it's had a marked impact on the business in terms of bringing it back to life. And so we're buying it at a time for an incredible price for the nature of what it does, which I'll talk about in a sec. So just as a financial proposition, acquiring it at a price, we couldn't acquire an asset like this anywhere in the world in that industry at that sort of price, I don't believe, but also at a time where its performance is, some really good investments being made, and we're going to be able to unlock that business moving forward. What it does is seriously a service business. So it has service contracts for fire suppression systems. It has about 20 to 25% of the market in New Zealand. In New Zealand, you have to get a certificate every year to sign off the safety of that system, or else you lose your insurance on the building. And so as the fire provider, you have to certify it, you have to make sure it's working. If there's any breaks, you have to fix it, and you're the one to sign it off. And it's under long-term contract. So it's a very stable, attractive business. It's very much an optimization scale, field utilization business. And I think there's some real benefits to be got again from growing its network presence organically, not necessarily through acquisition at all, just bringing it back to life. What I'm really excited about, though, is I'm really proud to have that brand. I mean, to have ADT and Wormold in your business in this part of our world is sort of like having, Amazon and Meta, in your portfolio and going, I've got two pretty good brands. In our world, that's sort of what we've got, particularly in New Zealand. What I'm excited about, though, is I'm really excited to take what we've done and with ADT, which the guys in Wormold haven't seen for a number of years, the solutions we now provide, and going to their salespeople who talk to, 25% of the biggest businesses in New Zealand, every year, and do work for them and say, look at what we actually are doing on the security side. Could we help you with that? And I think I'm not a big fan of cross-sell synergies. In fact, we've not forecasted any in this acquisition at all. But I actually believe that when the Wormold guys see how far ADT's moved in the last couple of years and what we're offering, they will get excited about having conversations. Obviously we'll incentivize them as well to have those conversations, but to actually open up the door, to effectively 25% of corporates in New Zealand. So I think it'll lead to some really strong growth in that market. So, we're waiting at the moment. We've made the acquisition, we've inked the deal. We are in a wait period at the moment. JCI is finishing the legal separation of that business and its rejiggling of its New Zealand assets. We don't yet have a settlement date. It will be sometime in the next couple of months. But we're absolutely we're keen as mustard to get it and to get involved. It'll be very exciting.
Okay, gotcha, understood. You already touched the topic of capital allocation. So your most recent capital allocation was about acquisitions. How should we think about this going forward? Because
I think,
based on my understanding and my calculation, you soon generate a lot of cash flow. So how
yeah.
do you likely allocate this?
Look, I think the caveat has been, well, firstly, we've had to prove the cash, and we've started to prove the cash, but to really get to your point, Christian, over the next year, or two, it's going to become very apparent that we should generate a lot more capital than we certainly we need to run the business, to pay interest, to pay tax, whatever. So what are you going to do with it? And which is a new position for us to be in. We've had this issue to this point also around the tax losses and the effect of them, and that does influence, to the degree you may return capital or pay dividends. You really need to understand that. Now, we are in the process of our half-year result. We've come to a firm view that that's all been noise and those tax losses are sound. But funnily enough, we've generated enough profit anyway that it's probably not material moving forward, and that those losses are largely going to be used up very quick anyway. So now we look forward, we're beginning to think about what is the best mechanism. And, obviously it depends a bit on your own trading price versus, whether you do buybacks, what's the most tax efficient piece to dividends. I think, and look, I won't speak for the board, but we recognize that in Australasia, a dividend is very powerful, especially to retail investors. And so building a dividend track record over time consistently, and growing it, I think has real value. I'm a shareholder. I'd love a dividend too at some point. That being said, we do still though have, and whilst we are able to acquire very accretively, where we think that does add true value, not just for the sake of the exercise, we are still going to want to, use some capital for growth where we think it makes sense. So I think it's a really great question. I think it's a question we'll be able to answer more and more clearly as we go through this year and we start to shake it out. My personal view will be something like, we'll start to do a bit of, shareholder returns, whether that's dividends or buyback. We'll use a bit of capital probably to see if we can continue to supplement, to the business. If we can, find the right things to buy that add value. And there is an area that I would call out that I think is interesting for us to still put some capital to work. And then if there was anything large, and there are a couple of transactions that still could sit out that may be opportunities or may not be, we'd probably have to raise for them anyway because they'd just be large. So, I think it'll be a journey we undertake this year. But in the first instance too, we definitely don't want to gear up. And, there's real value to, we don't need to be delevered totally, but, I'm not interested in sort of driving a highly levered business. I've done that for a number of years here now, and I quite like, not having to worry about, paying interest and all those sort of things. So, yeah, it'll be in the mix. So I think
Okay.
we'll be in a position to give you a much clearer answer, as we get towards the back end of this year, is the best answer I can give you. But I'd also make a point. I kind of expect, one thing you have to bear in mind is because we are listed, we are creating interest in this sector ourselves. And it's one of the pitfalls of being listed is that we found a really good area to apply capital. We're clearly starting to make that work. We're having some success. Of course, what that will do is we'll attract a lot more capital to that area. And so I myself have seen a lot of roll-ups in my career. And what typically happens around now is you start to see PE turn up and start to buy random assets and bid up the price of everything. And I'll make one really firm commitment to everybody. Like, I won't bid up the price of assets. Like, you're not going to just be buying stuff, and you won't see us buy from, we'd be paid a little bit more for Wormald because it is worth a lot more, and it's a slightly different business. Outside that, we're very firm on our M&A sort of what we will pay, and that won't change. And so at some point we might not be able to buy much more anyway because the pricing will move past. And if that happens, well, of course, we're always listed and someone can buy us if they really, really want to. So, we'll see what happens.
Okay, I just want to emphasize for the audience when Denison says they paid a bit more, it was 4 times EBITDA, if I'm not mistaken. So,
Yeah.
that's a pretty low
Well,
multiple for
and,
such a business.
Well, and can I make a point on that too in this forum? So Wormald in Australia was bought by private equity off JCI in 2016. Now, I don't have an exact multiple for everyone. That was a performing business, same dynamic, just a bigger market. I've absolutely had it verified that they paid more than 10 times EBITDA for that business, which is very consistent with what you would pay anywhere in the world. And another private transactions in the fire space, we've seen north of 10 times EBITDA every day of the week. So 4 times, again, I never expected we'd actually have the opportunity to buy it. I always thought if we could, it would be great, but I never thought we'd get the value proposition that we were able to get. And look, to be honest, one of the reasons is we're a very trusted counterparty. We're very respectful of JCI. We've enjoyed working with them. We work well together through challenging situations sometimes. The other thing is we had cash and we were able to execute. We didn't need, the only reason we raised money afterwards was we saw an opportunity to try to diversify the register to make sure we kept our gearing. We had a good response. And so it was an opportunistic situation rather than a required one. And that just puts us in a very strong position. I like the idea of a fortress business and a fortress balance sheet. And if we can keep ourselves into that position, we have very low downside risk, which is, important, I think.
Okay, maybe let's switch gears, because when I recently listened to your presentations, I had the feeling that both of you, Shenin and Denison, that you are very excited about the video guarding. So what is the key difference between the video guarding and the technology you used before and many other players are using still, and you're still using it? So what's the key difference, and why are you so apparently excited about it?
So the key difference is the technology before this allowed you to only respond as an event was happening or after it had happened. And so historically, and this is the same globally, and even so with Verisure in Europe, for anyone that may follow Verisure or have Verisure in their houses, what you're buying is a camera system that you can watch. And you're getting a signal alarm, as I call it, or a sensor alarm in your property. And what that means is that if there was an event, let's say someone came to break into your house, in our world, they'd come into the house, the sensor would go off, and we would get an alarm. And this is the industry in Australasia. And so we'd go, we've got an alarm. What do we do? And so we would call the owner of the house, ask them, what do you want us to do? And they'd say, well, can you do something? And the only thing we could really do was send out a guard, because the police would not respond to a sensor alarm going off, because it could be anything. And the 95% of the times the sensor alarm goes off, it's a false alarm. So the police would not respond to a sensor alarm in our market. So therefore, you didn't have a big uptake. Initially, in the early days of the technology, 30 years ago, a lot of people would put them in their houses and have these, they felt safe with them, but then they came to realize that they really didn't do anything. All it was telling you was that, it was annoying and you had to spend money on a guard, and the guard wasn't allowed to do anything either. All they could do is then call the police after they'd been there. So it was really like failed insurance. Now, what we offer today and what technology and this AI technology, AI edge-based, technology is allowing us to do is people now have a lot of cameras in their houses, which they themselves monitor. And they can either see on an app on their phone, a Ring doorbell, or whatever, your preferred choices. And that's great. You can see it yourself. If you're watching, if you're getting the alert, if you're getting the notification, or you have nothing, which is the typical situation. What we are able to do now is we're able to effectively alarm that camera and it trigger, so that, like a security alarm would, when you put a sensor alarm in, when you leave the house, if you turn on, suddenly any cameras you choose. Now, we obviously say to people, we can monitor every camera in your house, but really we just want to monitor the ones outside. The moment that somebody steps into that premise, the perimeter that we set up with those cameras, we're able to see them and respond. And so our rooms now, our control rooms, our bat caves, get an image come up and we go, oh, Christian's breaking into David's house. what do we do? And our guys are suddenly watching you, Christian, and you might have a 6-pack of beers and you're putting it on David's door. And the guys might say, look, there's no threat there. Christian looks happy. Let's just watch him. We don't think there's anything going on here. We'll just let it happen. Or they can call the police and say, this looks like a threat. Christian looks like he's actually carrying a weapon. He might be there to do harm. Let's call the police straight away. And the police will respond because we're professionals. We're A1 graded with licensed security operators watching. Likewise, what we can also do is come on the speaker and go, hey, Christian, what are you doing on the property? We noticed you've been coming every day with beers to David's house. You know he's not here. Maybe you should leave. And we could actually deter the event. And so that's very, very different, right? It's like having your own security guard watching your premise. And it hasn't been possible now. And it's not something that any other major brand is doing as their flagship solution for security today. We are the first people in the world with ADT to be doing this. Everywhere else, they're just selling you a basic intrusion system with cameras you can watch. Now we are actually providing you a security service. Now, the flip to that is it costs you more. So what used to be a $40 a month fee for something that may or may not work, and then there's extra charges if you have a call out, it may cost you $120 a month now. But it actively works. We've deterred over 40, we've actually caught over 40 criminals this year in Australia alone. We had our first event in New Zealand last week. New Zealand's only had kicked this off after the Australian market. With the police, and we're deterring far more crime than that. So it really works. So for the first time in 30 years, the electronic security industry has a security solution that works. So that's what we're taking for, and that's the difference. I think I've explained that, Shenin. Shenin is frontline with her sales team every day taking inbound calls. Is that a reasonable description, Shenin?
Yep, you've covered it, Denison. Absolutely.
But do you have is it more about upselling to existing customers or generating new customers for you?
Look, in reality, it's really new customers. So, now it's, so again, we're taking the attitude, anybody with a perimeter. So if you've got a house or a building or a business with a perimeter, this solution, it works. And it's what you do. Now, the real opportunity at the business end of town is right now, if you had a big factory, let's say you're a brewery, right? What you would do is at night, you'd have either patrols driving around regularly, or you might even have a guard full time at your premise. This replaces all of that. If you have cameras set up and they're alarmed and we can go direct to police, it's a better solution that can see more than one person can, or a random patrol at one time a night. It sees it every minute that it's on everywhere that you want it to be seen, and it goes straight to the police. Now, the benefit of that is it's also far cheaper than a person. To have a person on, 24 hours is about $400,000 a cost, whereas it might cost you as a business $3,000 or $4,000 for us to provide that service, right? So it's a very, very big financial disruption. So in the first instance, that is, again, why we're driving to that commercial market, because it's not just a better service, it's also a lot cheaper than what they might be doing. And then driving that down, down to anybody with a perimeter. And I think one of the things that got noted to me by one of our American suppliers when they came out to Australasia, one of our key technology partners, was how many fences and how many fences there are in Australia and New Zealand, even though they're not necessarily barbed wire and all that. Like, everybody in our world operates in a perimeter. So the addressable market is actually really significant, and New Zealand as well.
Okay, understood. One last question from my side, and that's about the EBITDA to free cash flow conversion, because you showed us that you're trading at a 7 times EBITDA multiple currently. So could you lead us through the bridge from EBITDA to free cash flow? Are you rather asset light, asset heavy? Because I think that's almost interesting for the audience.
No, look, absolutely. So we've transitioned the business, and I'm really focused on the ADT piece because it was such a big part, it was such a big acquisition for us when we made it. when we bought ADT, it was capital intensive. So they were discounting, old solutions to try to keep their business going. Think of it like fixed line telephones. They were discounting fixed line telephones into your house to try to keep you on the telephone, and giving and doing it up front. When we took it over, that's what it was. We transitioned it straight away, but then it took a year to flow through the business to a situation where now we charge upfront at a margin for everything we do. So we've transitioned the business from being capital intensive. The only business we have in our portfolio that is capital intensive is in New Zealand. It's our medical business. And that's about a third of the New Zealand business. And it's where we buy a medical home alarm button, for want of a better term, with some monitoring devices for the patients or for the people, for the elderly, and we lease it to them. So we have to buy the equipment and we lease it to them. So there is some capital attached to that. So essentially, EBITDA is cash flow. Stay in business CapEx is frankly servers, computers, pretty much standard costs. Now we do have control rooms, we do have a lot of servers. They do need to be replaced, but it really is at our scale now is about $3 million a year. And there'll be years where it's actually less, and then there will be some years that will hit 3. I think 3 is hopefully an on average, a high number. And then we have on top of that the medical business, which again has a return on capital on it, but that's about $4 million a year. So EBITDA is essentially free cash flow, flows through. You've got you've got interest. Obviously, the interest line now is fairly straightforward in terms of it's just senior bank at 2 plus 7.5% to BBSY. So we've got. Well, post the acquisition of Wormald, it's about $110 million of gross debt at BBSW plus 2.75. Tax, the tax line, as I say, we're burning those losses. The corporate tax rate in Australasia is on average 30%. We will be lower than that for some time, but not much. But essentially we move up starting to pay tax. And then we just have this stay in business CapEx, call it $3 million, then maybe $4 million a year to sustain and grow the medical business. So, on a back of a business that, post Wormald is a $53 million EBITDA business at the bottom end of our range, we should generate, to your point, Christian, really decent free cash flow and pay down the debt, or use capital pretty significantly. We are a service business, and that's probably the better way to answer the question. So we provide a service. We don't provide capital. We're not having to buy stuff to do it. Working capital cycles are fairly clean. Like we have a few cycles that can be a little bit of timing, sometimes quarterly. The quarters themselves can be they're slightly different quarters through the year. We have a very big June quarter, typically, which is the end of a lot of work. Usually, we sign up a lot of work July through September, so we are buying equipment to put it in place. So the cash cycle through the installation part of our business does move around, but on a year and a half on half basis, it's very clean and very consistent with EBITDA.
Okay, understood. Thank you, Denison.
Perfect. We got one question from Paul, and he asks, from a strategy perspective, in which area should we expect your next acquisition and why?
Look, I think there are probably two. Well, sorry. If you look at the business we've built today and said, what with the footprint you have today, what could you still use to accelerate, to get scale, to really take advantage of this opportunity? And that last acquisition in Australia we made was called BNP, and it was based in Sydney, and it was really around taking an existing guarding and patrol business. So where they have existing customers. So if we talk about that brewery again, Christian, let's say we took a business that had they were using guards and patrols, and they'd started to use camera technology to replace them. And so it was a really long-standing business with a great reputation, with an existing book of business. And what we've done is take them over, and we've gone to their customers and say, hey, as your trusted provider, we could actually use technology to replace some of this labor, to improve what we're doing for you, to lower the price. to give you a better outcome and actually accelerate our penetration of this market. That has worked really well. Like, I'm really, really happy with that. And at the moment, we only did that. BNP was really New South Wales only, and it's worked well. And we've got a full team that operates in business called ADT Guard. So inside ADT in Australia, there's a business unit called ADT Guard, which is being led by a gentleman called David Medhurst, who was a founder of one of the biggest guarding and patrol companies in Australia. He joined us last year. And so I think we could still buy strategically across Australia a few little businesses like that to really accelerate on the ground that rollout of the ADT Guard to commercial enterprise. I think that would be a really again, speaking as an owner myself, I see that it's a land grab. Any way we can accelerate those customer conversations to build our network and to do it accretively, would be really attractive. The only other way I would posit, and I'd be careful with this, is in this journey from where we started, and I've made the case, we had to invest in the platform, and we found these solutions and we've become early adopters of them, even on a global basis. When we look globally, we are actually probably leading the mainstream current existing industry today. There are a lot of little players when I look at America and Canada and, regional players that are starting to do what we're doing and how we're doing it, but the big brands aren't. And so, a question could be, if we got the opportunity to very accretively extend our footprint into another geography that we could understand, it would obviously have to be incredibly accretive. It would have to be robust. It would have to be profitable. It would have to meet a lot of criteria. It would have to be manageable. So it'd have to be something where we don't extend our team that would fit in. Would we or could we do that? Well, look, we may, if there was the right opportunity. And so it's not something that I get out of bed wanting to do. Like, it's not something where we're like, oh God, it'd be great to go around the world and do it. But it is subject to opportunity, and we are opportunistic, potential. So I think, that's probably dream stuff. Like, that's a bit of, we'd have to see, a lot of things would have to happen for that to happen. But, again, we'd only do something where people would be happy, on day one that we did it, even if it's a financial thing. But ultimately we'd have to prove it up. I think what we are starting to see, and this is what Shenin's doing with her team is so important, is we're starting to prove up that we're really creating this unique proposition. And if we get really comfortable about that what we are doing is, absolutely on the money, the market's there, the proposition's there, the value's there, the customers are there, then, if we did get that opportunity, we might do it. But the other two things that enter my mind, there's nothing obviously to announce or we're about to just jump into, but I think we would be open to those sort of thoughts to go if when they come across our desk, I guess, or if we found them.
Just a quick follow-up regarding M&A. As if I'm not mistaken, 3G is now phasing out in New Zealand. I think it will be finally switched off at the end of March. As you said, you're taking an opportunistic stance regarding M&A. Would that provide an opportunity for you to buy those companies which are now facing bankruptcy because they didn't have the balance sheet you had when you transitioned from 3G to 4G? Because I watched a few companies that are ending business, and very small players with up to 2 million in revenues, and maybe tuck-in acquisitions would be something you could consider.
I think again, just stepping back, what we are doing, and the analogy I'd make is the industry outside of us today is largely like the fixed line telephone industry. So if you use the telecommunications industry as an analogy, but there's no one operator, there's like 2,000 operators, but they're all sort of they've got customer bases, they're selling a service that's being sold. What's unique also about it though is they're largely old. So those businesses are owned by people that have done that for 20 or 30 years that way with that technology, and there's lots of them. The opportunity remains, and this is why I say, a limited amount of, sort of ongoing sort of tuck-in is actually part of potentially a capital strategy as well. Is, we have certainly in Australia, we deal with 800 of probably 2,000 of them, and we actually look after them already. So where they are either running out of money, they want to retire, they can't keep up, whatever, then absolutely. And those conversations are there. And that's where that signature business fits in for us. The difference, one of the differences between, say, that wholesale business and Signature is Signature has access to capital. I've said to them, like, if there were, partners that we can help grow, that, grow the overall economics, and that's either us owning them or we help them grow, we can use capital there for a good return. So, related directly to 3G, in New Zealand, look, my sense is it's still a little early for us there. We need to see some more come through. What I really want to focus on is New Zealand's, in a funny way, really a year behind where Australia is now. So, what we've proven up in Australia with the real focus on commercial enterprise, the driving it through the business, the, Shenin's team, driving, they're doing it in New Zealand, but they haven't cracked it yet like we have. Now, part of that is it's been a very difficult economy in New Zealand. And so, it has been through recessionary times. Now, it's a solid business, but there hasn't been a lot of, necessarily a lot of change. At least that's what I'm being sort of, I guess, told or seen. I think we're now entering that zone. So we're very open to it. I think that is something, but I don't think I think it'll be an ongoing feature. Probably not material though. Like, it's one of those things. With those kind of, with the $300 million cap now, I mean, you might be talking about spending $500,000, $1 million. Obviously we'll inform everybody and make sure our shareholders are updated with what we're doing. But it's not. It's a consistency rather than any one thing, making a difference. If that helps.
Okay,
nice.
understood.
I was actually going to ask you about internationalization, but I guess you already read my mind. So if there are no more questions in the chat, we could probably end this. I know it's late at night, Friday for you, so I want to be respectful of that. Maybe you want to watch the Australian Open or something. So yeah, that said, Shenin, Denison, and Christian, thanks for joining us, and thanks to everyone who tuned in live to this business breakdown.
Yeah, no, thank you. I really appreciate the opportunity, the interest, and support. So, we're working hard. We've got a good team, and we're pretty excited about the next couple of years. So, appreciate your interest.
If you enjoyed this conversation, I'm sure you'll love microcapclub.com, and subscribe if you'd like to follow along. Thank you so much for listening.